Welcome to another exciting show on the Professional Edge. I'm talking about plan today, enjoy tomorrow. So, how can we plan today to enjoy tomorrow? Well, let's think about this. When you think about a vacation, you always set the destination and then you plan going backwards. Basically, how are we going to get there? Are we going to travel by air or are we going to travel by car? Second, when we get there, where are we going to stay? So those are things that we apply towards your retirement planning and your financial planning and your tax planning and your estate planning. So these all three things combined together. Being a tax attorney, a CPA, and a certified financial planner, we coordinate all of these plans today so you can enjoy tomorrow. So ask yourself this, we just started 2025, do you have your estate plan in force, in effect? And if you do, are there any modifications that you need to make or adjustments? Are your decision makers okay? Is there a trust that needs to be put into existence to protect your child from a shaky marriage that they may be in? Because if they receive that inheritance and they commingle it with marital assets, then if that relationship dissolves, then their inheritance is going to be going to that ex-son-in-law or daughter-in-law. So think about that for a second. If you know that the relationship might be on the rocks or you've seen signs, if you've been married 40 years, you see the signs. Well, go ahead and plan today, and here's how we plan today. We draft your estate plan to place the child's beneficiary interest in trust for them. We allow them to be the trustee, and they can access the principal and income for as long as they shall live. And then that way, anything that's contained in that trust, if that marriage should unravel, is not going to be subject to the claims of that ex-spouse. That right there is how we plan today to enjoy tomorrow. Yes, so it might not be you enjoying tomorrow, but it might be your kids, and that's what we all sort of concern ourselves with, is that we, plan for them. A lot of us want to leave them a legacy for that benefit, and we don't want that ex-son-in-law or daughter-in-law to get any of your hard-earned assets. So if that's a consideration, and we also may have a child that is a spendthrift, you give them $1, they spend $4. We all have those in our families. So if that's the case, another way to plan today to enjoy tomorrow is that we plan today with your estate plan and place in force in your estate planning document a creation of a testamentary trust that gets funded. And with that, then we come back and we say, all right, we're going to give them the money in trust. We're going to have a trust protector. And if they start squandering the money, then the trust protector comes in and says, no, you're not going to squander it on a Ferrari to deliver pizzas. We're going to buy you a Volkswagen to deliver pizzas or a Honda to deliver pizzas, not a Ferrari. So that's one way that we protect them. So that way we can also structure it to where they receive, let's say, $2,000 a month every month for the next 10 years. That way we know they're not going to squander the whole amount, because a lot of individuals have never received $100,000 or more in one lump sum. Think about that. When is the last time that you received $100,000 plus in a lump sum? It's probably an inheritance, a life insurance beneficiary designation, or you sold an asset. And a lot of us, if we sold our house, we take that money and buy a new house. So we never really had disposable access to $100,000 plus. So what we want to do is just protect that planning today. We're going to establish that testamentary trust, allow them access to it, but not allow them to fritter that away. So how is there another way that we can plan today to enjoy tomorrow? Well, tax planning, we're all getting our 1099s now. So tax planning for 2024 is pretty much done. There's a couple things you can do to reduce your taxes, some IRA contributions, those things there. You can't even do a charity contribution. Those had to be done before 12/31 in order to count on your 2024 taxes. So wake up call. You're doing your taxes now. If you need to do some tax planning, now is the time to do that for 2025. Once you do your 2024, you say, wow, is there any way I can reduce my taxes? Well, give our office a call at 877-654-9798. That number again, 877-654-9798. We take a look at your 1040 tax return, see what your investments are doing, and we compare the two because a lot of mutual funds have distributable capital gains. Even though you never receive those dollars, you're taxed on them. It may go back into your account, meaning you earned them, but you didn't spend them, so why are you paying tax on it? So that's something to consider when you receive your 1099 from your brokerage firm. And being a tax attorney, a CPA, our clients at estate management counselors, we try to minimize their taxes because if we minimize the amount of tax they pay, the net benefit that they get to keep is increased and therefore their overall return is increased. So think about that for a second. If you want to maximize your return, you want to minimize your tax consequence. That's how we plan today to enjoy tomorrow. So we have that in line. Next thing is you may be retiring or in the process of thinking about retirement. So how do we plan today to enjoy tomorrow? Well, let's run the numbers to see if there is a probability of you sustaining your retirement income. It's called a Monte Carlo simulation. And it basically takes into account 1,000 random rates of return in the market. So it says, what is the probability after given 1,000 scenarios of random rates of return? Because we all know the stock market doesn't go up each and every day. So what is the probability of success that this portfolio will sustain itself through your retirement based on your withdrawals? That's what that Monte Carlo simulation does. And you would be surprised. A lot of people say, hey, I have $1 million, 10% return. It's $100,000 a year. I'm going to spend $100,000 a year. Well, I can tell you this, the market does not return 10% or even 20% like we've had the past 2 years. And you have to go back clear to 1998 to get 2 years back to back that are over 20%. So think about that for a second. It's 25 plus years ago that we had to go back to get a double-digit rate of return, 20% plus 2 years in a row. Not likely to happen again. So therefore, we know that the market has random rates of return. So what is the probability of success given 1,000 random rates of return over your 20-year life expectancy in retirement? And again, that's another thing. You got to plan 20 years for retirement. It's the first generation that has to plan 20 years for retirement to make sure that you're not going to run out of money before you run out of time. So the plan today is run that Monte Carlo analysis, see what we got to do. And wouldn't you want to know that, hey, you know what? If I spend $5,000 a month in retirement, I'm going to run out of money at age 78. But if I back that down to $4,500, I make it to 86. Okay, no one in your family's made it past 80 years of age. Okay, that's a better figure. I would want to know that when I started my retirement, that if I, can manage on $4,500 a month versus $5,000 a month, that my probability of success goes from 40% to 80%. That would be a significant calculation that I would want to have in my documents and analysis before I started retirement. So if that's something that interests you on what is the probability of success of your retirement, give our office a call at 877-654-9798. That number again, 877-654-9798. So as a listener here on the Professional Edge, we like to give our clients a benefit, and that benefit is by combining your estate plan, tax plan, and a financial plan all in one, and we call it the bundle. So you can get more information on that by visiting EMC, that is Echo Mary Charlie, thebundle.com, Echo Mary Charlie, thebundle.com. So planning today to enjoy tomorrow. What's the other plan that we can do? Well, let's sit down and say, oh, you have a side hobby. Well, we all know that hobby losses can't generate a loss and be deductible against your W-2 or other income. But if we make this a business and you actually lose some money doing your business, that business loss can actually offset your active income or portfolio income. So with that in mind, what's the difference between a hobby and a business? Well, the IRS sets out some criteria, and if we can match that criteria, then that hobby loss, call it $3,000 that you lost, versus a business loss of $3,000, well, that's going to save you, quick math, federal and state, 30%, $900. So wouldn't you want to know the difference between a hobby and a business? Because if that would save you $900, wouldn't that be worth a conversation to have with us? If it is, give our office a call at 877-654-9798. That number again, 877-654-9798. And that's just a simple way of being a tax attorney and a CPA. I look at things differently and say, okay, you got this, quilting operation, and you do quilts, and you sell some, and you buy some more stuff, and you actually, enjoy doing that on the sidelines. But, you would spend more than what you sell. Think about it. So you're not really in it to make a profit. So wouldn't you be able to write off those losses that you have? Well, if it's considered a business in the eyes of the IRS, then that $3,000 loss in our example would be able to be deducted off of your income tax return, saving you $900 in taxes. Well, guess what? That $900 savings, you can go buy some more material or some more yarn or whatever that hobby may be. So if that's something of interest, again, give our office a call at 877-654-9798. 877-654-9798. This is the way we plan today to enjoy tomorrow. I appreciate you listening in to The Professional Edge. More coming up in our next episode.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney CPA for over 15 years, Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.